Hi, this is Bill Fung, your local Denver realtor. I'm here today with Lindsey Beamon with Goosehead Goosehead Insurance.
There we
And,
go.
okay, and we'll be talking a little bit, some questions about insurance, of course, for a first-time home buyer as well as for somebody who is a small investor that does one, two, or maybe three or four rentals, and then a couple of just quick fun questions to ask. So again, like I said, let me introduce, this is Lindsey Beamon. Some of you actually might have seen her before. She and I had lunch a while back, and we were at a restaurant, and we did a quick little take on that
Yeah, a
one
quick
too.
little appearance on Instagram.
So I'll let Lindsey introduce herself, and then we'll kind of go right into the questions. This is the first time Lindsey has actually done an interview in front with a camera. So to play it safe, we both have a sheet here that we can look at and questions just to make sure we cover everything and not kind of fumble through everything.
Yeah.
So Lindsey, go ahead.
Awesome. Well, thanks for having me, Bill. I'm excited. I've never done anything like this before, and I checked out your channel and saw a couple of videos, and I loved the idea. So yeah, I've been here in Denver for 8 or 9 months now, so still getting to know the area and everything, but loving the insurance industry and getting to know some great real estate agents, loan officers, and enjoying my time with Goosehead Insurance as well. So
To start with, say, first-time home buyers or general homeowners as to insurance and how that goes, and then we'll go ahead and move over to perhaps people who are individual homeowners who want to go ahead and invest. I have a number of clients like that have bought 1, 2, or 3 properties as investments, and that's a little bit different when it comes to insurance.
yeah.
And then we'll go ahead and finish up with just some fun questions and see what happens there. So the first question, of course, is, Lindsey, what's a standard homeowner's policy cover, and what doesn't it cover? And if there's any difference between it being a single-family home versus a condo or a townhome?
Sure. So main thing there is a homeowner's policy is a owner-occupied dwelling. So it covers the owner-occupied property as well as their personal belongings, whereas if it were a condo, it's being rented out to someone, the owner would need a landlord's policy to then cover the structure, the liability, and any kind of like rental income that then comes with that. So
okay, so we'll go back to then specifically, even if it's a single family home detached, homeowner, or if it's a homeowner that lives in a condo or townhome.
Sure.
So specifically there, so the standard homeowner's policy covers both the inside of the home and the outside, or is there a difference when it comes to, say, a townhome or a condo versus
Sure.
a freestanding house?
Sure. So a freestanding house or a single family, it would be a homeowner's policy, also known as an HO3, whereas a condo or townhome would probably be insured under a condominium policy, which is an HO6.
Okay.
They cover the same things as far as personal property liability. Main difference just being the roof being for one, because the condo would have multiple potential occupants throughout the structure, or sometimes an HOA will cover the roof, whereas a homeowner, you're responsible for everything in the property, whether or not you own the home or not. So.
Okay, so let's go ahead and look at, for a first-time home buyer, how much liability insurance should a homeowner have regarding just owning a home?
Yeah.
For whatever dogs biting people or that type of thing.
Yeah, so at Goosehead, we always recommend $500,000 worth of liability coverage. But I mean, really, it's going to depend on how much liability the person has. If they have kids, dogs, a trampoline, a pool, that's all going to grant them higher liability. Therefore, they should have a higher liability coverage. But we always recommend $500,000 because liability can protect you from anything, like a Amazon delivery man slipping on your front porch and potentially suing you on your property there. So we always recommend $500,000, and then we also have umbrellas that could cover beyond that if client were to need extra liability there as well.
Now, is there a kind of a state requirement in terms, what's the minimum amount of insurance you should have?
On the home?
On the policies, yeah, on home policies or anything like that?
Just in general or for liability?
I guess both, if there is.
Yeah, so there's not necessarily a requirement. Like I said, for liability, we always recommend $500,000. I see a lot of clients go with $300,000, or if they're renting, sometimes just $100,000. And then as far as the actual structure of the home and insuring that, we always go on the rebuild cost of the home. So again, there's not necessarily across the board, you have to have this much insurance, but we always go on the rebuild cost of the home, which is going to differ from property to property.
Okay. So when you're looking at that, probably we've heard it all the same time, is that with insurance, should you bundle your home insurance with your car insurance or motorcycle?
Sure.
I don't know, maybe in some places you also insure your boat if you live on a marina.
Exactly, yeah, we've seen it all, but bundling is a great discount. It's probably the biggest discount any carrier can offer. It's usually 10 to 20%, just depending on the specific carrier you end up going with. But I always recommend it. One, so you have your policies all in the same spot. You don't have to worry about keeping track of all these different carriers and, who's my house with, who's my motorcycle with, and it's just kind of all over the place. Whereas if you bundle, one, you're getting that pretty decent discount, and then two, you just know where everything is all at the same time. Most carriers have an app you can download, and you can just see everything in there as well. So.
Okay. So do you get more discounts if you have more cars? I mean, for most people, if it's a couple, obviously they're going to have two cars.
Right.
But if they happen to have, a third person, whether it be a child or another family member, and they have three cars to insure, would it be cheaper, or it's just like the first car, second car, and that's it?
Sure. So I don't know that there's necessarily an easy answer to that. Some carriers have multi-car discounts. Not everyone does. Most of them kind of just look at bundling.
Okay.
But at the end of the day, it'll come down to each specific car and person, whether or not they have accidents, tickets, claims, all that kind of stuff. Because you could have 6 cars on a policy and get a multi-vehicle discount.
Okay.
But if all 6 of those cars have 5 accidents each, that discount's not going to help you out very much.
Right. So let's go back a little bit, because I did introduce you as with Goosehead Insurance, but you're actually, Goosehead is not like Allstate or
Correct.
Prudential. So
Right.
let's talk a little about what is Goosehead Insurance. I forgot to bring that in earlier.
Yeah, no worries. So you're right. Goosehead is not a specific carrier for insurance. Goosehead is the company, and we're a brokerage. So in Colorado, at least, we have over 50 carriers. So essentially, I'm an agent for Allstate, Safeco, Travelers, all these different carriers underneath the umbrella of Goosehead Insurance. We're the fastest and biggest growing broker in the country right now. So we're getting access to more carriers every day, it feels like. And yeah, so it's kind of nice to not be we call that a captive agent when you only write with one carrier, because I like to say that insurance isn't one size fits all. You know, we can't write the same policy for me and then for you and the person next door, so being a broker, we're able to find the best policy for that individual and their individual circumstances.
Okay, so that would actually save time if somebody went through you, because you could essentially shop, all the different insurance companies. Like we said, you could be Allstate, Safeco. Now my mind's going blank. I know there's like 30,000
Right.
others. But so the question then someone would ask is like, well, is it going to be cheaper if I go directly to that company instead of going through you? Because wouldn't there be kind of like an extra layer of cost if I went through you versus going directly to the company?
Sure. Not necessarily. With Goosehead specifically, it depends on the state you're in. In some states like Texas, we do charge an agency fee. Colorado's not one of them, luckily. So there is not necessarily an extra cost to go through a brokerage. So that question's a little difficult. It really depends. But
Okay.
being a brokerage, we do usually get like an extra little discount for carriers. So it does happen pretty often where we'll use Allstate as an example, where I'll be speaking to a client. They'll let me know, thank you so much for shopping around. By the way, I did also get a quote from Allstate. It's coming in at this price. So I write it down, good to know, keep it in my back pocket. Go through the shopping process, and then, turns out Allstate's my best option. And it's actually $1,000 or so lower than the Allstate quote they got on their own. And that's mainly just because we're a brokerage and we have access to those carriers and discounts.
Let's talk about a particular situation that just occurred where I called you in to help out one of my clients.
Yeah.
And in that case, my client had just for some reason, his insurance carrier had dropped him. And he was calling around, and a lot of the other insurance carriers had heard that when he said, well, my insurance company dropped me, they immediately said, we can't help you.
Right.
So I'm going to let you tell the story and take it from there, exactly what happened.
Yeah. So a big thing with that specific circumstance is a lot of the carriers don't necessarily take the time to understand where the client's coming from and what's going on in their situation. They hear, oh, this guy has a lapse, which is what happens when you don't have insurance for a period of time. It's called a lapse. They hear that he's had a lapse, they get scared and immediately either think that he's a risky client, it's a risky property, that for some reason a different carrier didn't want him, so why would they? But come to find out, that client actually only had a lapse of about a couple of days. He called me thinking it was about 3 months of a lapse, which in the insurance world is a very long time. But it was only a couple of days because his mortgage company put in what's called forced placed insurance. Because if you have a mortgage, they require you to have homeowners insurance. So they put in forced placed insurance. Now, it's expensive, it's not great coverage, so I was able to help him out there. But from my understanding, why a lot of those other carriers turned him away was because, and maybe it was a little bit of lack of communication from him and his mortgage company as well, but they assumed, oh, he has a lapse, I'm out of here. And that really wasn't the case. So just took a couple minutes to actually understand where he was coming from, or help him understand where he was coming from. And yeah, we were able to write him a great policy and save him a couple $100.
Well, that's great.
Yeah.
So what I'm hearing is you can have a lapse. In fact, you could even have a lapse of insurance, maybe a week to maybe even a month, and it's still very feasible to get a decent insurance policy. But if you've had a lapse, say 3 months, that's going to be a completely different situation. Is that correct?
Exactly. Any lapse is going to be a little tricky. There are some carriers that will just absolutely say, nope, we don't want it. Like I said, we have so many carriers throughout the country that we have options when situations like that arise. It just depends on the specific carrier, but yes, you're right. Usually it's not going to be the same price or less expensive than they were paying prior to the lapse, but it's not a lost cause. We can always find you insurance. It just might not be at the price you're looking for when it comes to a lapse specifically.
Now, nowadays, you're going to see a little bit of age difference here. We used to call our insurance agent when we had a situation where we had to file a claim.
Right.
How does that work nowadays? You're an insurance broker with working with many carriers. Would they end up calling you directly, or would they actually have to call the specific insurance company that you placed them with?
Sure. So it can work either way. One thing I do love about Goosehead is we have our own claims team. So, they're just regular people like you and I working there that you can even just call for advice if you need help filing a claim, anything like that. Usually, if you're filing a claim, you're scared, you're in distress, like clearly something's happened to your home that might not be the easiest thing to go about. Usually clients don't know how to handle that. So most of the time what we see is they call the carrier, say I need to file a claim, but they don't really know how or what's going on or what they need to do. So our claims team will kind of walk them through that process and hold their hand through the process, because that is depending on the claim, it's usually could be a scary time for the client.
Sure.
On top of already not knowing how to do that. So our claims team can completely walk them through that. But usually I just advise that my clients are welcome to call me and I'll connect them with my claims team, or they could call the carrier directly as well. I always advise that they call the claims team, because a lot of people file claims for little things, and that affects their insurance score when they don't always know that they should not be filing the claim,
Right.
which is why I love our claims department.
So the claims department, your claims department at Goosehead will advise them, yeah, in this case, you're probably better not actually doing an insurance claim, and maybe it'd be better if you, quote, pay it out of your own
Right.
funds.
Again, depends on the situation and what your deductibles are, what your coverage is, all that kind of stuff. But our claims team, I mean, if I sold you a policy today, our claims team could pull up the same policy in our system,
Okay.
see all of your coverages, hear your situation, what's going on, and then walk
Okay.
through everything together and figure out what you should do.
So we're talking about houses, which is a little different than car accidents, but not everything happens between the hours of 9 a.m. to
Right.
5 p.m. So if something happens that insurance be involved, of course they say you should call your insurance company right away.
Right.
But let's say something happens and you can't call for 2 or 3, 4 days or even a week.
Sure.
How does that even affect the whole process and procedure for the insurance owner or whatever?
Right. Not necessarily. I mean, they do advise that you file a claim. Every carrier is a little different. It's usually 30 to 60 days is kind of the limit there on when you can file a claim.
Okay.
And it really just, I actually have had a client call me at 3 a.m. before, so
Okay.
I will.
I was gonna say, has anybody ever called you?
Oh yeah.
Okay.
Oh yeah. But I mean, if you get in a car accident, they always advise you take pictures of everything, get their driver's license number, take a picture of the license plate, get their insurance documents, everything like that. So if you get in an accident at 3 a.m, you can call your carrier the next day, and as long as you have those timestamps that are on the photos you take, you'll be perfectly fine, because they'll always ask you when, where, how, exactly what time did that take place, all that kind of stuff. Because I mean, at 3 a.m, if you get in an accident, you want to go home and go to bed.
Right.
You don't want to be filing a claim.
Right.
But yes,
exactly.
you do need to call as soon as possible to kind of get that process started. And
Okay. So let's go back to houses again. Things that have happened that I've heard, sewer backups.
Yeah.
Does a regular homeowner's insurance automatically include sewer insurance, or is that extra, or how does that work?
it is extra. It's not automatically included. That being said, it doesn't usually tack on a whole lot to the total premium. I always recommend $10,000 worth of water backup coverage. We see clients do $5,000 a lot. If you have a fully finished basement, I'd recommend $25,000. So again, situational, not one size fits all there. But no, it's not included. But it's one I highly, highly recommend, especially here in Colorado when we get freezes. Pipes freak out, don't know what to do, and they send water up the wrong way.
Right.
So I always recommend it, but no, it's not automatically included.
Okay. So let's go a little bit further. If for some reason the sewer pipe from the house to the street, something goes wrong, it gets crushed, it gets broken somehow, tree roots get in there, and you happen to find out because you call a Roto-Rooter guy and they said we can't get through because
Sure.
Does the homeowner's insurance that you have cover I'm going to call the exterior part of the sewer?
Sure. So the sewer lines and everything that run underneath your property into the street, we call those service lines. And no, those are not automatically covered either. That's service line coverage.
Okay.
Again, doesn't tack on a whole lot to the total premium, and one I would highly recommend. Always quote that out in the policies that I write personally. Because you're exactly right. If a tree root grew into your pipe, they now need to dig into the ground, tear out the whole pipe, completely redo the whole entire process. That gets pretty costly.
Okay.
So if you don't have that on your policy, that's going to be all out of pocket.
Okay. So I'm sort of rabbit holing this here, and if you're not sure about the answer, let me know. Lately, I've been getting mailings from supposedly my public service. I'm going to say my public service, where they say you can get sewer line protection for X amount of dollars and stuff like that. Is it worth it getting that from that company that might be associated with the public works, or is it better to get it on your own policy?
I'm assuming you're talking about like a home warranty type of situation.
They don't quite say it that way, but they just say, they tell you you're responsible for any maintenance from the outside of the house to the public connection.
Gotcha.
On that. And
Okay.
they say it that if you have to dig up the concrete, the driveway and all that, it'll cost you tens of thousands of dollars. But if you only pay us $5.99 a month, all that will be covered.
Okay. I highly recommend putting it on your home insurance policy.
Okay.
I've had a couple clients that don't always have the best experience with, and I'm assuming this is a home warranty, don't always have great experiences with home warranties or things like that. Or they're only insured up to a certain amount of coverage, but you think it's unlimited in the situation. So I always recommend adding it on your home insurance policy separately.
Okay. People are always talking about the deductibles. What is, and I already kind of know, should you have a high deductible, a low deductible? How do you decide? I mean, most people obviously are going to try to make the decision based on what the monthly premium is, but what do you suggest?
So this is another one, not one size fits all. At the end of the day, it comes down to what the client is comfortable paying out of pocket. And for those of you that don't know, the deductible is the amount you have to pay out of pocket before your insurance will kick in and cover the claim or whatever the situation is. So it really just depends. If I were fresh out of college, first time home buyer, I probably couldn't have a $10,000 deductible. Whereas someone that's been in their career for a while and is pretty developed could probably afford that. So really situational. The lower your deductible, the higher your premium. The higher your deductible, the lower your premium. So at the end of the day, it comes down to what the client can afford. A big thing we see there, especially here in Colorado, is roofs. We get a lot of hailstorms.
Right.
If hail damages your roof and it's just done for, you'd only be responsible for paying that deductible. And just to put that in perspective, a roof is anywhere from $30,000 to $50,000. So if you have a $5,000 deductible, that's nothing compared to the $50,000 roof. So really just situational. And we always coach our clients on, we have standards, we have averages that people go with, and that's usually what I'll initially quote, but that's usually a relatively long conversation that I have with the client just to see, sure, I'm getting to know them on the phone, but I don't know what's in their wallet.
Right.
So at the end of the day, that's kind of their decision, but we coach them through the whole process on how to decide what that deductible should be.
That makes sense. So you mentioned briefly about roofs, and of course we're one of the states that there's a lot of advertisements about solar panels and stuff. How does that fit in with homeowners insurance and coverage of the roof? Your thoughts on that? Go.
Just go. So we use what's called a replacement cost estimator when trying to decide what coverage you need on your home. And now this is just for coverage A, which is that dwelling coverage. That's just the roof and the walls. Solar panels play a big part in that. Actually, I had a client this week. I was in communication with her realtor. The realtor sent me over all the information I needed on the home. Called the client to present the policy. did not know she had solar panels. She had 22 solar panels, and it increased the rebuild cost of the home quite a bit. No big deal, we just re-quote the policy. But they do play a big factor into the rebuild cost of the home, because solar panels are not cheap. So they are covered under coverage A for the rebuild cost of the home.
Okay. So obviously, because I've seen a lot of homes, some roofs look like that's all they have is solar panels.
Right.
And then other ones I see a small one that looks like it might be, quote, 6 feet by 3 feet
Sure.
on that. So
Yeah.
obviously then the insurance cost is dependent on the number of panels
Yep.
or either whether how simple or how complicated the system is.
Exactly. Yeah. There's different. First question is, how many solar panels do you have? Most of the time, I gotta tell them to go outside and count, because once you figure out how many solar panels they have, there's different levels on what kind, how strong, all the things. But yes.
Okay. Is this something that they would want to bring in the original company that sold them the solar panels, or pretty much you can kind of talk them through what needs to be done to get insurance?
No, usually they don't need to contact them.
Okay.
Most of the time it's relatively simple, and we can figure it out.
Okay. You had mentioned a while back, I'm kind of jumping around,
Yeah.
an umbrella policy. What is it? When should you get an umbrella policy, or who should get an umbrella policy?
Yeah, so an umbrella policy is extra liability. So that question from earlier that we spoke about, if you have extra liability, so if you're a family with 3 kids, a trampoline, a couple dogs, and a pool, you're going to have higher liability than someone that just lives by themselves. I usually recommend it for someone with higher liability. Total premium for an umbrella policy is relatively low, and it's usually an extra $1 to $5 million in liability coverage. So even if you're having a lot of life changes, if you're getting married, buying a new home, your kids are now old enough to drive, all of those kinds of things, I always recommend an umbrella policy.
Okay. Yeah, that's and I have one too, because I have a business, and I know most business owners have umbrella policies.
Yep.
Because there's limitations on all the other ones there, so that kind of helps it out.
Yeah.
Discounts for any type of safety features that a home has, or if they happen to have a special upgraded window type of thing.
Sure.
Does insurance take that into account?
Yeah, so safety features, absolutely. Most homes have smoke detectors.
Right.
That's a discount. Cameras, burglar alarms, security system. Some carriers even give you a discount if you have a fire extinguisher.
Okay.
So, yep, all across the board. Even deadbolts on the doors can get you a discount. Usually we see, that's something that I ask all my clients is, do you have all of these things?
So I also throw, well, nowadays, if a person who's selling a house has to have a carbon monoxide detector, so that would that also qualify as an additional safety feature when it comes to insurance, or no?
Most carriers include those as smoke detectors,
smoke
just in
detectors.
that category of things.
Okay, sounds good. We have a homeowner who bought a house, basement is not finished. They go ahead and finish it. Should they tell you they finished that?
Yeah, absolutely. Any changes you make to your home, whether that's upgrading your kitchen, replacing your flooring, tearing down all your wallpaper and getting new paint on the walls, any renovations really, you should let your insurance agent know. Depending on what it is, it might not affect your coverage. But like I said, any life changes, renovations, anything like that will either bring up the rebuild cost of your home, or if you're downsizing, we can lower the cost of the coverage. So yeah, that should absolutely be communicated to your agent, and they can make adjustments from there.
Okay, and you had mentioned it further. I'm glad I wrote it down, because I'm not sure do I need to insure at appraised value, market value, or rebuild cost?
Yeah.
You sort of touched on that earlier.
Rebuild cost, always. Always and forever rebuild cost. And that's what it takes to rebuild your home today. let's say today your house burned down, we would rebuild it at the cost it takes to actually rebuild the home, not what it was worth when you wrote the insurance policy or anything like that. Actually, I get this question all the time: is why is my coverage not matching the price I purchased my home for? But insurance does not look at the price of the land, the school district, the neighborhood, anything like that. The example I like to use is that insurance just looks at the roof and the walls to rebuild the home, and they could rebuild you the exact same home in Pueblo, Highlands Ranch, Littleton, Thorin, anywhere across the globe, and it would cost the exact same because you're rebuilding at the cost to rebuild the home, not the land, school district, and other things like that.
I think a lot of times people forget that when it comes to a single family home, when you purchase it, theoretically you're buying the land also.
Exactly.
And in most cases, as I've heard for insurance, land never depreciates, or quote, there's very rarely a loss of land to go ahead and get reimbursed on. So in theory, you could say if a home was 500,000, 50,000 of it might be attributable to the land cost.
Exactly.
So your rebuild amount would be maybe only 450,000 that would be insured.
Exactly. Yeah.
Okay.
I mean, again, rough numbers, but yes, absolutely.
Yeah. No, I understand. I'm not asking for specific numbers because I understand that insurance can change literally day by day, depending which carrier it is. And each insurance carrier does some specialization that maybe another insurance carrier doesn't. So things would be quite different.
Right. Well, in those situations, if I present a policy to a client today and they say, oh, let me talk it over with my wife, absolutely, go ahead. Just want to let you know, this is the price right now. I like to say it's like an airline ticket. You know, if you go look to fly to New York today, you're like, okay, these flights look good. Perfect. I'll buy it in the morning though. You check in the morning and it's $40 more all of a sudden.
Right.
Same thing here. It's not going to double overnight. It's not going to decrease by half overnight, but it could fluctuate a little. You never know.
That's right. Let's move over to, I'm going to call it the individual investor that maybe, is buying 1, 2, 3, or about 4 houses, because I have a few clients that, first started out buying maybe a condo or a single home, and then they moved and decided to keep it as a rental. So when we're talking about that, let's look at the basic difference, which is, what is the difference between you living in the house having homeowners insurance and now you renting out that house, whether it be a condo, townhome, or a single family home?
Sure.
You're now basically in the business of renting.
Yeah.
So kind of go through how that works.
So those are also a little situational. Again, homeowners insurance is owner occupied. You live there, your belongings, your liability, your stuff. If it's someone renting out a single family home, a duplex, a condo, a townhome, any of those situations, they would get a couple things. If it's their seasonal home, we can insure it as a secondary homeowners policy, meaning, and that's a question we have to ask them, is how many days a year is the home vacant? Depending on their answer, we can insure it as a secondary home. If it's just a seasonal thing, if someone that lives in Florida has a vacation home here in Colorado, we can insure it as a vacant dwelling, meaning we're insuring the property, the roof and the walls, but not necessarily the people and the things in the home. You can still add liability and personal property to those policies as well, but they're not included like they are in a homeowner's policy. And then if it's rented out, you would get a landlord's policy, again, to cover your liability, the structure of the home, if you furnish the home, the personal property in the home. And then your tenant would get renter's insurance to cover their personal property and their liability.
Okay. Is there a limit by any chance into how many policies you could have? I mean, I said, let's talk about somebody who buys or has up to 4 rentals, but can a individual, not like a big corporation.
Sure.
Let's say and I actually have one client that has like seven, 8, I think he even has 9 homes.
Yeah.
Besides his own personal one, that do they have to get separate policies from separate insurance companies?
Sure.
Can they get it all from one? Are there limitations?
Yeah. So this is another great reason to work with a broker. I actually have another realtor friend of mine who has 9 condos, now 10, purchasing a new one, and then his primary home.
Right.
And he had individual policies spread out between a bunch of different carriers. So I said, absolutely not. Send those to me right now. And we got him on what's called a scheduled policy, where we have all of the homes listed under one policy, one monthly payment, all in the same spot. Still their individual coverages and situations, but all insured on the same spot. Again, another situational one where the best part about working with a broker is I weigh out all of these things for you to see if it makes more sense to schedule them on one policy, or if it's less expensive, we'll write them on individual policies. So it really just depends, but depending on the carrier, it could go either ways. You can get a multi-policy discount from doing them all with the same carrier, schedule them on one policy, or just have them all individual, whatever makes the most sense for the client.
So I'm going to take just a little side trip here. You are licensed here as an insurance broker in Colorado. So if you have somebody that has 2 or 3 homes here, a personal, a couple rentals here, but let's say they have another 1 or 2 homes, whether they're a secondary home or rental property in Texas or Arizona, can they go through you?
Absolutely. I'm actually also licensed in Texas.
Okay.
But
I didn't know that, so that was not a setup question.
I am only licensed here and in Texas.
Okay.
Now, my office, so the girl that sits next to me, the girl behind me, the guy across the hallway, we're licensed in all 50 states. So that happens very often, is I help out a client and they're, oh wait, I have a vacation property in Florida or Chicago or somewhere. Can you still help me? Absolutely. I just get them connected with someone in my office and introduce them that way, and they still have an amazing experience with them. Or even if I help out a client and they say, oh hey, my mom just moved to Connecticut, can you help her? Absolutely. We are licensed in all 50 states is the way I like to word it, because just because I'm not licensed there doesn't mean I'm kicking you to the curb.
Right. So since we're talking about basically rental properties and stuff like that, is it better to insure them under an LLC or a business name versus their own real name?
Sure.
If you want to say
like
that.
Individual versus a business. Not necessarily a yes or no answer here. Some carriers won't let you insure it under an LLC or a trust even. A lot will. So it really just depends. If a client calls and they say, I need this insured under my business's name, great. We have options for that, and I know which carriers I'm not going to quote because I know which ones won't allow that.
Okay.
Whereas if it's an individual name, almost any carrier will accept it.
Okay. Now here in Colorado and maybe in other places, we're seeing what is happening is that cities are allowing what's known as ADUs, or additional dwelling units. Typically they are not attached to the house. They could be like a carriage house, or somebody's converted their detached garage into an apartment.
Right.
How do they address getting insurance, or how does insurance look at that situation?
Yeah. So most of the time that would be listed under other structures coverage, which is coverage B on a policy. Other structures is just anything not attached to the home you're insuring. Anything from your mailbox to your driveway to a detached garage, or a guest home, or in this situation. Just another one that, as I'm talking to the client, I pull up the home on Zillow. Like, hey, I see a guest home back there. So automatically I know I'm going to increase that coverage. Usually the standard is just 10% of your main coverage. And that's mainly just to cover mailbox, driveway, a shed, a fence, that kind of stuff. But if if I automatically know they have a detached garage or a guest house or a gazebo or something like that, we're going to increase that coverage. Now, if they have a tenant living in there, I would recommend a different type of policy. But for those situations, we would just increase the coverage.
So I have to ask, since you were just passing by it really quickly, have you had people make claims on mailboxes?
I personally have not, actually,
Okay.
but and it's not even a claim specifically for a mailbox. It's more if you had a total loss of the property and you needed to replace everything.
Got it.
I don't know that, maybe unless someone hit your mailbox driving, but that wouldn't be a homeowner's claim.
Right.
So no, I have not.
Okay, no, I was just curious.
Yeah.
I mean, you never know. Some people have some pretty intricate, ornate mailboxes.
Yeah, absolutely.
So
it's worth insuring.
Yeah, it's just like, well, let's find out about that. So, is there any difference insuring homes that are in your typical subdivision neighborhood, like Highlands Ranch, Mission Viejo, places like that, versus you own a farm that has 40 acres?
Yes. So a typical subdivision is just going to be kind of our standard homeowners insurance policy. If you're on more than 5 to 10 acres of land, the biggest thing there is going to be how far are you from a fire station. Because if you're pretty far from a fire station, it's usually over 15 miles, you're going to have a pretty hard time obtaining homeowners insurance. That's the biggest thing when it comes to the land you're on. Because if you have that much land, it's automatically a fire risk. So the biggest thing is, where's the closest fire department?
Got it. Okay. So that bears probably a more private conversation and getting all the details to really be able to nail down an answer that would be appropriate for the particular person.
Exactly.
Okay. Let's do a fun question.
Okay.
What has been the strangest claim that you have seen occur?
Most of the time, strange is an interesting word, because most of the time we see little claims that people shouldn't have been filing.
Such as?
A crack in the windshield for a car, or a broken window on the home. Just something that doesn't seem small to you, but in the grand scheme of your insurance policy, it's pretty small. Especially if you have a $5,000 deductible on your home. If they tell you, I don't know how much it is to replace a window, if I'm being honest, but I don't think it's $5,000. Or even if it is, realistically, it makes it more sense to pay out of pocket, because it's going to hit your insurance score and your claims history. So, which is going to affect everything else. For your policy renewal, when you go to file another claim, buy a new house, all that kind of stuff is still going to affect you. So usually it's just little claims, or I'll see claims for hail or water that are just so extremely expensive, and I want to know what happened, because I'm like, whoa, that's a lot of money for a claim. I don't know that personally I've seen anything crazy to the point where I'm like, please tell me the story. I don't understand what's going on, but usually it's just something that shouldn't have been filed in the first place, or something that's extremely expensive and I wasn't expecting.
Okay. I have heard that there is a database, I think it's called Clue. Can you explain or tell me a little bit more about what Clue is and how that affects the everyday person?
Absolutely. So when we're talking about auto insurance, we run 2 reports. Clue and MVR, which is motor vehicle records and claims history. So a lot of times, just so I know up front when I'm talking to a client, I ask them, do you have any tickets, any accidents, any claims? And a lot of the times they don't think I'm going to find out. So they just say, I don't think so. And then I run these reports and I find out. The reason I like to ask up front is, one, so I know if they have a couple, I know which carriers to lean towards that will accept those claims. But basically those reports just show us the date you got in an accident, whether you were at fault or not at fault. If you filed a claim, what the claim was for, when it was, and how much the claim was. And if you have any speeding tickets or anything like that, those usually fall off after 5 years, but they drastically impact the premium and the coverage on your vehicle.
So that's important to understand that, because when you're bundling your homeowner's insurance and then you also want to insure your car, the clue report really kicks in as to a determinant of what the cost is of the whole scheme of having a homeowner's insurance as well as having car insurance.
Right, exactly.
Okay. Can they split it? And would there ever be a situation where homeowner insurance is specifically just with this company and then trying to spin off getting car insurance with another company?
Yeah, we do that quite a bit. Just recently I had a client who it's a couple, they have 4 vehicles purchasing a new home. And one of them had 2 accidents on their record, and putting them all with the same carrier, I would have been pitching them a policy that was more than I wanted to pitch them and more than they wanted to pay.
Right.
So I looked into options. This specific carrier requires that you bundle home and auto insurance. So I just put 1 car there and put the other 3 on a different policy with a different carrier. So another one that's just situational, and a good reason to work with a broker, because I can weigh out all those options.
Right.
You don't have to put everything here or everything there. We can split them up. Or people with teenagers, maybe it makes more sense to have your teenagers on a policy by themselves and you and your spouse on one, or a spouse and 1 child, or vice versa.
Okay, good. So let's, I'm going to throw this one at you. What would you want people to know about insurance in any aspect, with a homeowner's insurance, whether it be single family home, townhome, or condo, that I haven't asked you and you would go, Bill, you need to ask this question? Is there one?
Well, maybe going back to claims history.
Okay.
Claims history not only follows you, but the property.
Okay.
So for example, say you have a hail claim on your house. You're selling it, I buy the home. I need homeowner's insurance. I'm gonna go to a broker to obtain that homeowner's insurance. That claim that you filed is still going to pop up on the home, and it affects my price. So it's not just claims that you file that follow you, it's the property's claims as well that will stick around. So that's something good to ask even when you're looking into buying a home, is what is the claims history on this house? Or if you have a good friend that's an insurance agent, maybe they'll look at it for you.
Okay.
But that's an important one that we see a lot when I'm asking clients, hey, I see a water damage claim from this date. I know you're just buying this house, but this is affecting your premium, and why we're seeing some increases that we weren't expecting. So that's a big one that a lot of people don't expect, as well as roof age. Most roofers will tell you a roof is good for around 20 years. Insurance says 10 years. And a lot of people will say, well, I just got a certification on my roof. They told me it's good for another 5 years or so. Unfortunately, insurance does not care about your certification. They just care about how old the roof is, and they want it to be less than 10 years, or they won't insure it at replacement cost usually.
Okay. So since you brought it up, I have a question, because nowadays there is, in the roofing industry, they say there's impact 3 and impact 4 roofing material that's more resistant, et cetera, et cetera. I'm not saying is that true, and does that affect what your homeowner's insurance premiums will be, or how much you can go ahead with claims?
Yeah, so it does help. Different classification levels of the type of shingles you have can be hail resistant or more hail resistant than a regular shingle. And it usually does provide a little bit of a discount. Another situational one, because if you have a roof from 2025, class 4 hail resistant shingles, perfect. That's a great situation. That's going to help our premium a lot. If you have a roof from 2010 with those same shingles, not going to help you much.
Okay.
So another situational one, insurance just wants your roof to be as new and up to date as possible. And usually 10 years is around where they stop insuring it at replacement cost.
Okay. So we're going into the matter of definitions. When I talk to homeowners and I ask them things like how old's the roof and stuff, and they say new, and then further conversation, new to them was
Mhm.
2 years.
Yep.
Or could be 5 years.
Mhm.
In insurance vernacular, something like the roof or the furnace or stuff, kind of thought-wise, what do they consider new?
New this year.
Okay.
No, not even necessarily.
Yeah.
Usually anything in the last 10 years, we can insure at replacement cost.
Okay.
Last 5 years is what I like to hear. Last 3 years, I get pretty excited.
Okay.
So it really just depends. And when it comes to things like water heaters, plumbing, electrical, all that kind of stuff, always let us know. And that's always a question I ask, that most of the time, if it's a client purchasing a new home, they might not know that, which is why I like to work with great referral partners like realtors and loan officers. Give them a call and say, I need to know when this was replaced, please help.
Sure.
And they can look through the inspection, or because if it was a home built 1970s or so, we'd hope that the plumbing and heating have been replaced since then, and that'll get us a discount. So
Right.
the more discounts, the better.
Sure.
Yeah.
Okay, great. Well, I appreciate the time that we have spent together,
Yeah.
and some of the basics of insurance, which are important for first-time home buyers,
Absolutely.
which may not have any experience, and just some additional information. If you've been a repeat homeowner that maybe you never thought about, or
Right.
for people who go ahead and buy a few properties that they want to use as income.
Yeah.
So thank you very much,
You're so
Lindsey.
welcome.
Lindsey will go ahead and give you her contact information.
Yeah.
And also, I kind of joke, she'll have additional information in this video. It'll be somewhere either like left, right, top, or
Somewhere
bottom.
around.
Because every time I says, oh, look at the contact information below, it's on top. Or then when I say, oh, it's over on the top side, it goes to the left. So
It's somewhere.
yeah, it'll be somewheres. Any questions? We were talking specifically about, of course, homes and stuff like that, but obviously, Lindsey can give you more information.
Yeah.
We just covered lightly about automobiles
Right.
and things like that. So Lindsey, contact information,
absolutely.
websites if you have it.
Yeah.
Go ahead.
So we talked a lot about first-time home buyers, but I always recommend doing an audit of your insurance at least once a year. So even for you seasoned homeowners out there, feel free to reach out as well. I'm happy to take a look at your policy and make sure you're properly covered. But yeah, my phone number is 720-912-1832. My email is Lindsey, that's LINDSEY, Beamon, B as in boy, EAMAN, @goosehead.com. Don't really have a website. I do have an Instagram, insured by Linz. So check it out.
Okay. And I just recently referred a friend of mine to Lindsey, and he lives in a duplex.
Yep.
I don't know if you had a chance to talk, but my understanding was that he was flying out of town and would probably pick up the conversation when he got back.
Yep, I got all of his information and a policy ready to go to present when he gets back on Monday.
Sounds good. Well, thank you very much. Again, I want to thank Lindsey for taking the
thank
time
you, Bill.
to have this little chat. And again, I'm Bill Fung, your local Denver realtor, serving the southeast area, which would be Aurora, Centennial, Foxfield, parts of Parker, Castle Rock, Highlands Ranch, those areas. And I'd love to help you either buy or sell a house, and then if we need some additional information of insurance, I have a perfect person here that we can chat with. Have a great day. Take care now. Bye.